Hey guys, what is going on? Welcome back to the channel. Again, I want to thank everyone for your support on the channel. All the viewers, all the subscribers, immensely appreciate the support. Today, I would like to talk about another type of trading method that can be employed around ex-dividend dates. A trading method in which you try to avoid the dividend. You do not hold the stock until the start of trading on the ex-dividend date, until it goes ex-dividend. You are not entitled to the dividend, and you essentially will sell off before that point to do a nice capital gain capture and then buy the stock back after the ex-dividend date when the price will decrease by the exact amount of the dividend. That's done automatically by the stock exchange, and then try to do a swing trade as the stock trends back up after that adjustment. So you simply do two capital gain captures instead of a dividend capture capital gain. So I'll kind of go through that. I did talk about that on my prior video, but there were a number of viewers wondering, if I was doing a dividend capture swing trade, why would I buy the stock and then sell it off before I would capture the dividend? So I thought I'd kind of go through that in more detail here. Again, using IRM as an example, as I just purchased 100 shares here on the bottom, as you can see here in the trade, 100 shares at $32.92. And then the whole idea is that if you can capture the same amount of the capital gain as a dividend, it's better to do that, lock in the price, and then after the ex-dividend date, when the stock is automatically adjusted down, buy it back for another capital gain. So two capital gain captures instead of a dividend capture, capital gain capture. Instead of a dividend capture swing trade, you essentially do two swing trades around the ex-dividend date. So the whole idea is that you add to the price of the stock that you bought it for the dividend payment. So I went ahead and did that, and then put in some limit sell orders here. You can see a limit sell at $33.51 that did not complete on the 12th, and another one here on the 13th that did not complete, $31.51 as well. So the whole idea is that if you can capture the dividend as a capital gain before the ex-dividend date, you can go ahead and do that, and then after the stock adjusts down after the ex-dividend date, you buy it back for another swing trade opportunity. So you do two swing trades instead of one dividend capture, one swing trade. So it's a much the same type of investing. A lot of stocks, as you can see here with Iron Mountain, will trend up before the ex-dividend date. There are a lot of investors who do dividend capture. Some will buy a couple of weeks in advance. Some will buy a week in advance. You really don't want to buy much more than a week or so in advance because you lock up your capital. You can't be using your capital for other types of trading. The power of dividend capture is that you jump into a stock for a couple days, get the dividend, and jump out right away so you can use that same capital on another dividend capture. So you can simply do multiple dividend captures with the same money per week. That's the whole beauty behind dividend capture. If you buy a stock a month or 2 months before the ex-dividend date, you can't really use that capital that's locked up in the price of the stock. So that's why some stocks will trend up before ex-dividend dates. But the whole idea is that if you buy here, you can go ahead and capture the same amount of gain just in the capital gain instead of the dividend payment that you would for a dividend capture. When the stock adjusts down, you buy it back, and then when it starts trending up again, you sell off for another swing trade. That's what I was doing with Iron Mountain here. But you can see here my trades did not complete. And that is fine, because if they don't complete, then you simply do what you were intending to do in the first place, the dividend capture swing trade. So you can try to do two swing trades with an ex-dividend date, or you can simply do the dividend capture and then the swing trade. There's two ways of playing the stock, and I really try to do the capital gain if I can't do it, and a lot of times you cannot do the capital gain just because the price of the stock does not trend up that much just a few days before the ex-dividend date. Sometimes it does, and you can do two swing trades instead of a dividend capture plus swing trade. So I hope that makes sense. The whole idea is that you lock in a guaranteed capital gain, and then you buy the stock back after it adjusts down after the ex-dividend date for another swing trade. So I hope I went into enough detail on that. Please let me know if you are not following exactly what's happening here, but it's a very powerful way of augmenting any sort of dividend capture swing trades that you might do. It takes a little bit more work. It takes a little bit more sophistication with the stocks you jump into, because not all stocks will trend up in this fashion before the ex-dividend date. And again, I only like to do these types of trades, dividend capture, swing trades, and stocks I'm more than happy to hold for the longer term. Because if you jump into a stock, put significant capital, and then the price of the stock trends down, you might have to hold on to that stock for a few months, maybe even longer. But if it has a high dividend payment and it's a very safe stock for a buy and hold type of investor, then you don't have to worry about necessarily jumping out of the stock quickly like you would a low quality stock or a penny stock. So again, this was a viewer requested video. There was a number of viewers a few months ago also suggesting this type of trading in which you don't necessarily have to always capture the dividend. You can go ahead and capture the capital gain, and then after the price of the stock decreases after the ex-dividend date, pick it up again for another swing trade or another buy and hold type of opportunity. So just wanted to do that video for those viewers wondering exactly why I would sell off a stock before the ex-dividend date. I would not capture the dividend, even though the whole idea was a dividend capture swing trade in the first place. So that is what I'm doing with Iron Mountain here, and I'll post a video after the trade is completed. Kind of see exactly what happens. The ex-dividend date is tomorrow, so I might try to do a video showing you guys how the price of the stock moves after or on an ex-dividend date. And again, you can sell off on the ex-dividend date and still capture the dividend. You simply have to hold the stock at the start of trading on the ex-dividend date. So essentially buy it the day before the ex-dividend date. So I hope that makes sense. If you guys have any questions about this, please let me know in the comment threads down below. I do apologize, I have not gotten back to a number of viewer comments. I've been very busy at work. I do anticipate having a little bit lighter schedule this next couple of weeks, so I'll definitely start trying to go through all of your comments. I definitely appreciate all your comments, especially your comments about viewer requested videos, as well as stocks that can be utilized in dividend capture, as well as longer term buy and hold. Definitely appreciate that as well. Always interested to see exactly what you guys have in your portfolios as well. So not to make the video too long, I'll kind of end it here. Again, if you like the video series, if you like the videos, please feel free to like, share, and if you're not a subscriber,